Roads, railways, seaports and airports, water, power, pipelines and communication networks. They're all part of a country's infrastructure. What was once the investment domain of large pension funds and endowments, the world of global infrastructure is now opening up to the private sector. Brookfield Redding is one of the best positioned investment managers to capitalize on this exciting and emerging opportunity.
Brookfield Redding is a global real estate securities investor. We have offices here in Chicago, London, Singapore, and Hong Kong. I've been in business for 22 years, and Brookfield Redding evolved out of that original activity. We currently have an analytical team of about 25 people around the globe, manage a little under $5 billion in assets. Our clients consist of major U.S. pension funds, endowments, foundations, as well as a series of 12 global funds that we run where the money comes from Australia, Japan, Taiwan, all throughout Australasia, as we call it.
We define infrastructure as long-lived physical assets that serve as the backbone to providing essential services and products to society. They tend to be characterized with high barriers to entry, steady and growing cash flows. And the main sectors involved, like transportation, for instance, which would include toll roads, bridges, rail assets, seaports, and then energy, such as oil and gas, pipelines and storage assets, and power grid assets, so electricity transmission and distribution, as well as some other sectors like communications, where it would be communication towers, satellites, and fiber optic cables that run around the world. In the developing world, there's a vast acute need just to build new infrastructure in order to maintain the growth of these economies. The World Bank has recently estimated that close to $20 trillion needs to be spent in the next 10 years to fund this growth.
Brookfield's been investing in infrastructure assets for a long time. Their history on the hydropower side of the business spans some 80 years, both owning and operating infrastructure assets. More recently, we've built a platform in power transmission, owning almost 11,000 kilometers of power transmission and distribution systems. In Chile, for example, we own Transelect through a consortium that we led, which delivers power to nearly all of the country. Brookfield has a long history of not only owning assets but also operating assets. And this expertise is brought to bear on investment decisions and is a real competitive advantage when we're analyzing investment opportunities and finding value opportunities where others do not recognize it.
If you think about it, if you're going to own a real asset, be it real estate, a commercial office building, or a hydro-generating dam, you want to buy $100 of value at $50 if you can. Now, it doesn't always work out that you can buy it at 50, but your entry point, what you pay for the asset, is arguably the most important decision you make. So I've worked with our people and taught them that it's more important to be right for the right reasons than it is to be right. Anybody can be right. It's hard to figure out if that's luck or if it's skill. So if you focus on buying $100 of assets for $50, you get the long-term equation right and you get the value proposition right, and that generates good long-term investment returns. I think back to my original days in real estate investments, and when I switched over to securities, the way that I really generated returns for clients was to go out and do in-depth research and find those undiscovered, underfollowed, undervalued investment opportunities that you could hold through a long part of the cycle and make good money. And as I read the AIC materials on the website, it was clear to me that they believed this as well.